Okay, so what I wanted to do in this video is to show that if you know a little bit of Google Spreadsheet, how to work with Google Spreadsheet, it will take less than 15 minutes for you to create a very custom tool or custom spreadsheet for you, where you can simulate your whole life, whole future finances, how your life will span out based on what you know today. And I did that for myself when I was recording the very first video in 2011. I had a spreadsheet similar to the one I will show you in this one, and which I have kept updating throughout last 13 years to see how my finances are changing. As you know, I had kids and I had other expenses. I bought a house, like all of those I kept adding to that spreadsheet, and that helped me a lot to better manage my finance in current, but also to get a forecast 10 years, 20 years, 30 years down the line, where exactly my finances will be. There are actually many similar tools and calculators if you just do a Google search, and those are good as well. But I like to be in control, and spreadsheet gives me that full control to um, fully customize the way I would want to see how things look. For illustrating, I think I will use an example in this video. The example I was thinking that I will use an example of a person who is graduating this year from college and starting his job, his or her job. So I was just doing a Google search, like what is the average age for US college graduate, and it's typically 22, 23. So I picked somebody who was born in 2001 who will be turning 23 this year, and they'll be graduating from the college. As they graduate from the college, they will probably get into some job, and they'll get some salary. That also I googled what is the average salary typically a US college graduate gets, and it's around $60,000. So I'll use that as an example. Somebody who's graduating and getting a $60,000 as their starting salary, how will their whole life look like? And while teaching, I'll probably teach some basic key concepts, because one of the core audience for this is my little daughters who may not know many basic concepts. So I'll teach some of those as well. Okay, so let's get started. Very first thing is $60,000 when the company pays. That $60,000 will be given, and this is an annual salary. So that $60,000 will be given to you either as a monthly salary or as a bi-weekly salary. Let's assume in this case, it depends on the company, but in this case, let's assume we are getting monthly salary, which is every month we are getting $5,000, which is 60,000. Now this is known as gross pay, which company is paying, but you will not get the whole gross pay in your bank account. The taxes will be a part of the gross pay that will be there as well. And I was just trying to Google net pay versus gross pay to show some good examples. So basically this is, I think, a good example, or so gross pay is your salary or wage before tax. That is $5,000 in our case. And then you have to deduct your taxes, and that will be your net pay. And this is the net pay which will come to your bank account. Now there are many calculators to calculate net pay online. I googled and I found one on this particular website. I'll link it on the video description. It is on ADP's website. There's a salary paycheck calculator, and I entered already over here. If somebody is being paid on a monthly basis and their salary for the full year is $60,000, then what would be their net pay overall? And this is where it comes. The result is their net pay out of the $5,000, that is the gross pay. Their taxes will be around, federal will be $400, Medicare will be $72, and Social Security tax will be $310. So $800 will be taken away in tax, Medicare, and Social Security. So the net pay in the bank account they will get is $4,182. Later, I think I will also show that even this 4182, there could be other things like medical insurance, there could be dental, vision, retirement. So this net can also come more, little bit more down, but for our example we'll take $4,000. so $4,000, if you multiply it by 12, 4,000 is per month net pay that is coming to your bank account. If you multiply it by 12, it's $48,000. So we can take that example. If somebody who's getting a gross pay of $60,000, which is a net pay of $48,000, how will their life look like? Now this part is where I started my own, like my salary was different, but I was not really sure like how my life will look like. So think about that person. And I know some people who are starting actually this year their career, but they would not know that when 10 years down the line, how much bank account balance they will have. 20 years down the line, 30 years down the line, or towards their retirement. Retirement typically happens at 60 year. So around 60 year, what will be the bank balance? And that's a big unknown. So that's something that this spreadsheet is basically designed that you can build by your own to get an answer over there. I have already done this, so let me expand that. So column D here is the net income that is being done, and it's $48,000 this year, 2024. Now the income typically increases every year. Your employer will give you some increment every year. So that could be, let's say, 5% increment. So this year it was 48,000. Next year it will be 50,400 if you do 5%. And that's where the Google spreadsheet formula starts coming in. Let me show you some formula over here. This one is a serial number, is how many years that person has worked. So this is first year, second year of working, third year, and by the time that person, if that person decides to retire at 60 year, that person would have worked 38 years. This is the age of the person. If he is born 2001, this is the 60 year. This is the current year to 2024 when I'm recording the video. So if that person decides to retire at 60, so that will be around 2061. Okay. And what I have done is I have just done +1. So if you see the formula over here, maybe I'll zoom in a little bit to show the formula. So you can see the formula over here. So formula is A3 + 1, which is A3 + 1. So this is all in control paste, copy paste. So A3 + 1, A4 + 1. This is just +1. This is every year it is incrementing by 1. The age is incrementing, the years of experience, and the actual year. Net income, however, is incrementing by this 5%. So I have used 1.05. So every year this will get multiplied by 1.05. So I have done D3 multiplied by $D$2. So every year it will keep getting multiplied by 1.05 all the way till the person gets retired. So at the retirement, if the person is getting an increment of 5%, the retirement salary will be $291,000 per year. Okay. There is a thing called 50-30-20 budgeting rule. Let me quickly pull this over here. So that basically, it's this philosophy is that whatever salary person is getting, at the minimum or advisable is 50% should be going towards your needs, 30% should be going toward your wants, and 20% towards your savings. Another way to look at it is 50% is short term. Like short term is your next 1 month, your next 1 week, 1 month, 2 months, 3 months. You need your groceries, you need your housing, you need your utilities. So that's your needs that you absolutely need. 30% is if you want to do some shopping, if you want to buy clothes, if you want to go to movies, if you want to go to a restaurant, if you want to go to a vacation. Like those are your wants. Those are not the needs, and that can wait. That can wait a month, 2 months, 3 months, 6 months. So that's, to me, is medium term. This is short term, this is medium term, and savings is your long term. Your typically retirement, if you have kids, you're saving for kids' college. Those are your long term. This is another graphic that I liked as well. Same thing. Your 50% is essentials, your housing, groceries, utility bill, transportation, insurance. Like you need this just to operate your life. 20% is your financial, 30% is what can also be known as the fun bucket. You are spending on entertainment, shopping, dining out, even charity if you're doing, your hobbies. And 20% is your financial goals. Let me maybe move it a little bit. So these financial goals could be retirements, could be long term. Okay, so that's what I have done. And this could be changed as well. Like for me, I think my savings rate was higher, my expense, my wants was again, and we can control and cut down on needs. So it is up to your situation. You can play around with these, and that's where this spreadsheet will help. Like depending on how much you are spending on your needs, how much you're spending on your wants, and how much you're saving, this spreadsheet can now calculate that how will your life look like. So I followed that 50-30-20 model, that out of $48,000, 24,000 will be spent for the needs, which could be 24,000 per month will mean $2,000, by the way. So $2,000 per month will go towards housing, which could be rent, which will be going towards electricity, could be gas in the house, and then petrol, which is the your vehicle, your auto insurance. All those things are your needs that you need to operate your life. Wants, which will be 14,400 per year if you divide it by 12. So it's around $1,200. So $1,200 per month you can spend in your shopping, in your want to go to vacation, want you go to movies, like all of those things are wants that can wait a little bit. And up to you what you can want to add in this category. If you want to buy a house, that's also could be a want, and you can take some amount of that 1,200 and just use it for saving. So that's why this is up to your control. And this saving is long-term saving, 20%, that you should definitely invest with 10 years, 20 years down the line, that the money you will need. So in this case, that's 9,600. If you calculate on a per month basis, so that's 9,600 by 12. So that will be $800. $800 per month. Another thing which I learned while I'm on this topic, you should, the way to save is you should, as soon as you get the salary, you should send your savings out. So if you get a $4,000 net pay, you should immediately transfer your $800 towards your saving, which you don't have access. So now you are left with $3,200. Out of that, you should take away your $1,200 towards your wants. And I think in future video, I will show what are the places that you can store this money. Typically, savings is where you would want to go for the highest return, whether it's interest, whether it's investment, that's the highest. Expense or wants is where you want to store for some mid-size returns. So it's typically savings account and things like that. And needs are where you may not get some in returns in your investment, because this is for your immediate needs. So here I have done that basic addition. And another thing to see is as your income increases next year, this will increase your the price, the rent will go up, the gas price will go up. So this accounts for that as well. So now next year you'll be spending more in your needs. Similarly, your wants, if you want to go for vacation, the vacation price will go up. So then your wants also is going up, and similarly savings part as well grow up. So this one thing I like about this model is at least it covers, as your salary is increasing, inflation is increasing, it takes care of those as well. And all the way till, if you just follow this model and do nothing else, in your final year, when you're earning 291, that is around 40 years. The rent would have gone really up, but it accounts for that. Your wants, prices would have gone up, and your savings also would have. So it accounts everything for that as well. Now, another thing to note is, for savings to begin with, you may want to accumulate that, because that's not going anywhere. So that's another thing I wanted to understand, is how much is being accumulated. So again, that's where spreadsheets are helpful. So I put a calculation over here, like this is equals to this saving for this year plus what I have accumulated last year. So first year I have accumulated 0, so it is just the same thing. But next year I have already accumulated 9,600 and then 10,080 on top of it. So now I have 19,680. So if you see, like, this is the formula, and then I just copied pasted this formula for rest, and now I have this accumulation that is happening, and this goes all the way till 38. It will be around $1 million. One thing to note, this is a pure saving with 0% interest or 0% return. So if you just keeps putting your money somewhere, this is how much you will make. But the idea here will be to invest in somewhere where this can grow even more than 0%. Typically 7%, 8% return is what you want from here. Similarly, this is your spends. Actually, let's talk about your income. The income that you're earning, which is increasing. By the time you retire, you would have earned $5 million in total if you just follow this simple model. Out of that $5 million, you would have spent 50% of your money on your needs. So that will be 2.5 million. 30% of your money you would have spent on your wants, which will be 1.5 billion. And this could potentially include your house, your car, like those things if you want to. Like typically that should go in this bucket. And then savings will be your retirement and things like that. So that will be left over at the end for you, $1 million. It's already 16 minutes on this video, but this is what I wanted to show. It's how simple this process is. And as you can see, like, this gives you a good idea of somebody who's starting their career this year. This whole thing took me less than 15 minutes to create this spreadsheet. And I'll share this in the link as well if you want to clone this. But very simple to create this spreadsheet. It gives you a good idea about your life. And as your life gets more and more complex, then you can keep adding more things on this spreadsheet, and it will help you further simulate many things, which probably I will do in future videos as well. But hopefully this was helpful. I'll talk to you again in the next video. Thanks. Bye.